You're watching Mirror 7 News. Stay informed, stay ahead for more news.
The U.S. Federal Reserve has cut its benchmark interest rate to its lowest level in 3 years. A move that's drawing a lot of attention from Wall Street, Washington, and ordinary Americans alike. The central bank announced a quarter-point rate cut on Wednesday, bringing the federal funds rate down to a range between 3.75% and 4%, marking the second cut this year. Now, on paper, this might sound routine, but this decision comes at a particularly unusual time. For the first time in modern history, the Fed has had to make a major policy move without access to key economic data, like jobs and inflation reports, because of the ongoing government shutdown. So essentially, the country's top economic policymakers are making big calls while flying half-blind. Federal Reserve Chair Jerome Powell emphasized that this latest move isn't the start of a guaranteed series of cuts. In his words, policy is not on a preset course. That means a further reduction in December is far from certain. Powell made it clear that the Fed will base its next move entirely on the economic data, assuming, of course, that the government can start producing it again soon. The rate cut wasn't without controversy inside the Fed itself. There were 2 dissenting votes, one pushing for a deeper half-point cut and another arguing to hold rates steady. That kind of internal division hasn't been seen since 2019, highlighting just how uncertain things are. Some policymakers are worried that the economy needs more stimulus, while others think cutting too much could reignite inflation. On Wall Street, the reaction was mixed. The Dow Jones slipped slightly, while the Nasdaq managed to close at a record high, buoyed by optimism in tech stocks and the booming artificial intelligence sector. Bond yields, meanwhile, rose as investors recalibrated their expectations about the Fed's next steps. For everyday Americans, this cut will likely make borrowing a bit cheaper, whether that's on mortgages, credit cards, or business loans. On the flip side, savings account yields may start to drift lower again. Financial analysts say it's still possible to find good returns if you shop around, but it's getting harder. Powell also addressed public frustration over inflation, acknowledging that while price growth has cooled, consumers are still feeling the pain from years of high costs. Consumers are not interested in why prices went up, he said. They're just unhappy that things are still expensive. All of this comes as the Fed ends its 3-year effort to shrink its balance sheet, a sign that policymakers believe the system is finally stabilizing after years of turbulence. Still, with political tensions, data gaps, and global uncertainty in play, Powell's message was clear. The Fed is trying to stay flexible, but the road ahead is anything but certain. Stay subscribed for more videos.